Wait, hold on, please. Hold on, please.
Oh, the bed.
So this is how the news plays out. So this is how the news plays out. You see the news, you see it. It trigger off before the news. I'm telling you the beauty of this pattern. Before the news, what happens here? You see this place. You see, this was trigger off. Can't you? And this is my. I should be. I'm not sharing it. I've shared it now. I've shared the screen. Okay, you should be seeing it now. Yeah, I've shared the screen before. So you see, this is what we call the session. This session. This is Asian session, right? This is 7:15. 7:15. This is Asian session. Asian session starts here. It starts here, 10 o'clock Nigerian time. The line that divides. So you see it. It started. See it. It triggered off the high of this place. It came down. That's why you don't need to rush when you see all the breakouts in the range. You don't rush. I'm not a breakout trader, but I'm an institutional trader. You see, they trap off these losses, these people that put their stop losses above this high. All those breakout traders that trade the range, they say they are trading range. And when the market breaks out of a range, upper range, you buy. When you break out, you know that is normal, the conventional wisdom they gave us. You understand the point now? So you see, the market was still ranging. You see the accumulation. See the accumulation. 7:15 a.m. It came down. I'm showing you the sessional range now and intraday. How you can use this AMD to trade different session, Asian to London. When the London opens, it trigger off the previous session high and low, and it's manipulate. They reverse the trade because you see this pin bar. It's as they use it to trigger off. See the oh god, see the double high here. See the equal highs here. See the equal high. So that is why you need the formula, the deep of every trappist zone. See the equal highs here. After just tiny week above this equal high, they've made their money. The trigger of the stop losses above this range here. People that are trading Asian range breakout. You see it because they have the information. People will be trading range. They will set their stop loss. They have information in their fingerprints. You understand? They know who is selling, who is buying, at what level. They know every chunk of orders. They have, most of them are partners to these brokers. Broker will give them information, everything. I'm telling you. So the induced candle, see volume they put in. Because they already know that people will put, a lot of people will put their stop losses below this low here. Below this low here. So they come down and in conjunction with London will open by 9 a.m. Nigerian time. Sometime 8 a.m. or sometime 9 a.m. So in conjunction with 9 a.m. London open, what happens? Because London open comes with liquidity. You understand? They grab the orders. After trapping off this in here, this stop loss is here. they distribute. Can you see it? E come to New York time. This is New York. New York. That is where this thing comes up. Non-farm payroll comes up 1:30 p.m. But before the non-farm payroll, you're already eating. You're already making money before non-farm payroll. Non-farm payroll will present you another opportunity. This is non-farm payroll here. See the non-farm payroll. This long candle here that breaks out of this place. 13:30. That's 13:30. That's 1:30 p.m. Nigeria time. See it? It came down. You see the man. You see the manipulation. See it. See it. It ranges upward. It went up. It come down to take orders from here again. Can you see it? They are still trapping a lot of guys that put their this in here. That's it trap. They come down to take another orders here. And what happened? When you see this withdrawal, will you sell? You won't sell it. And because the news is that a job report for US this time around is lower than previous one. That's negative. And because it is worse than being expected. You look at the forecast and the new value. The value for that was released was better was off than expected. So it's a positive, it's a negative for US dollar. This Euro USD. So Euro will be buying against US dollar. And because they are still going to manipulate the market above the news, at the top of the news, they are going to manipulate the market again. What happened? They've manipulated here. That's how you have to relax when you want to focus on news, you want to trade the news or whatever you want to relax. Let the pattern be set up. This is equal low. And you see this withdrawal. Oh, I'm showing you what you this is a free class. This is a free class. But I believe you can use this to make money and come to pay for VIP class. What I'm showing you, if it is you want to be trading on intradays, what I'm showing you, you can use it. You can be smart enough to use it and make money come to from full details or other patterns I'm using, like the KML or whatever. So listen very carefully. Listen carefully, please. Listen carefully. This is double. This is the bottom. They call double bottom, equal lows or whatever. And you see, immediately you see this withdrawal. What happens? You sell. You buy straight because the news is telling you to do what? To buy. And because it's in alignment with the structure. You see, this was taking over. What happened? It reverses upward. So you are still buying with the news. So it comes to the top of this place because they know that a lot of stop losses are still lying up here. Previous high, previous high. Here too. There are a lot of stop losses here. They are looking out to take more orders here. You can see it. After the news, what happens? They move the market downward. A lot of people will still be buying, news coming, not news has coming, not farm payroll. Go, 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 go. Boom. They move the market. They've taken up stop losses. See the number of pips you are going to make if you have this information. See the second day, you have almost about 112 pips. I call it post news. Maybe I'm going to do a separate manual for this. Put it in market when like amazing or whatever. Post news trading. You don't trade the news like the dump trade. No. You trade like smart guy. How the smart guys trade the news. You can imagine. The second day, it was still selling down. It was still selling down. They've manipulated the news, the market. So those people that are, this 145 pips was still selling down. And I told you, after the market take up the liquidity zone, there's always a pullback. There's always a pullback. If you are not smart enough here to sell here, you can still come and sell here. If you are not smart enough. After this place was taken out, there was a pullback here. See the pullback. If you go to a lower time frame, 1 minute or whatever, you see it clearly. So that is it. You see it? Market moves. It moves down. It moves down. So that's how to trade. That's how to trade You can use this thing to trade the news. You can use this thing to trade the news. You see, so I tell people on this thing, Euro, you know that Euro JPY alert I gave. Euro JPY alert I gave. This is the alert. See it. That Euro JPY alert I gave that was moving smartly. You see, this is the alert. You see it. That move almost about over 200 pips easily, because one, it take out. See, this is Friday or thereabouts. Friday, Saturday. Okay, this Monday, this Friday. This is midweek reversal. Midweek reversal. You see it? So those days time, it helps you to time the market out. If it doesn't break today, it will break tomorrow. You wait for when you see the pattern. When you don't see a break of market structure, you don't trade. But when there's a break of market structure, you know that, okay, this market has been reversed. But liquidity grab will be setting you up, will be alerting you when the high of this place is taken out. You see it? It will be alerting you. And because here we have the high on Wednesday, right? Rather, yes. This Monday, this Friday, Thursday, Wednesday. The high of Wednesday market took out the high of Tuesday morning. See, and what happens? You wait for this thing. The market breaks the structure. The structure is broken. I'm showing you what I don't. I do this in VIP class. Market structure is broken below. We are watching this place. We are watching this place. See what happens. This is a pattern. This is a pattern, entry pattern. Entry pattern here. Oh God. You guys are, I don't know. You don't just me. At least I won't reveal. You see it? So my fair people know what this pattern means. Yeah. The market must come back to it. Market, doji sandwich. You know, it's also I've known this thing for long. See the doji sandwich here. Then there's another pattern that they are collision, they are collided together. It gave me confidence to sell into this market because I have a confluence of many patterns there that collide together to make a better decision for me. You see it? Market must go back. Market must go back. It must touch it. It must, because of what the liquidity has been taken. You see it? So if you don't get this place, you get here. Who is chatting? Don't chat. Richard. don't leave this here. Market must grab it. We call it a return to what? To other block. This is other block. This is liquidity block. It's liquidity block. You see the doji sandwich. If you don't have the doji sandwich manual, I've traded it so many times in the class, I've in the forum. You see it, market must come back because there are a lot of orders lying down here. Market makers are going to put order here because you are telling, because people that put their surplus here, they are telling the market that, please, I want to buy. That's what you are showing to the broker. Buy for me at this price. And what the market maker will do, they will go back, they will go up there to take the order from you. They will sell to you. And when they sell to you, what happens? They made money. See, market comes down. So if you miss this stop, if you make this stop, another pattern will set you in again. If you made this stop, another pattern will set you in because of what this place has been grabbed. The liquidity zone here has been grabbed, and you wait for market structure to be broken. Oh God, that's the second step. Wait for market structure to be broken. Once the market structure broken, after the liquidity grab, because this is a 1 hour, this 1 hour, you are going to use 1 hour for your intraday traps. This 1 hour, after this has been grabbed, you do what? You set in. You can imagine how the market plays out. You see it, After each, because the low of this place too is being grabbed. You see it? The low of this place is being grabbed. And what happened? Market returns upward. It returns upward. So that's the retest. So I'm still selling. 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 So that's how markets will continue to go in your favor. That's my demand. Then you continue to go in your favor. Can you see it? Till till over 200 pips was made in Euro JPY the last week, end of last week. See it? For 200 pips. Another one happens here again. You see, another one happens here again too. You see it? You see this place? Let me take out that place. Yeah. You see it? This is equal high. Equal high. Can you see it? Because if I come in here, I see this fresh as a fresh order. Equal high. Because this candlestick will not pull up. That's one part again. It will not pull up to this thing. What do? I want to see a break of market structure. A break of market structure. A break of market structure. I use my trend line, or if you don't use your, just use your eye. The eye can just be, but I want to use my so that I can have the timing right. You see it? So this is another equal highs intradays, equal highs. Can you see it? And the market pulls back. Can you see the pullback? But it never breaks the structure. Oh God. It never breaks the structure. And waiting is essential. Waiting is essential. You don't rush like the crowd. You don't trade like the drunk traders. Market breaks. It breaks. I'm going to see. I'm going to see what market breaks. What happens? See it. See it. See it. See it. See it. Let's play it. Can you see the pullback? Can you see it? But because so if you are not careful here, if you want to see sell here, it will take you out. It will take you out. Why? Because something happened there. This is it. This is what happened. You see it? This 20, 19th. This is 18th. Here was taken out, right? Here was taken out. The low of this place was taken out and market grab upward. It pulls back to this place. So this is QML. QML beam. You don't shop. You don't shop plenty. So when you are wise, when you are smart, you take the market up and down. You take the market up and down. You take the market up and down. So that is how this intradays or whatever. So let's go back to the let's finish up the this thing. So we can go to many trade examples. So now we go to about the monthly. If you set up your monthly this thing, I told you about the monthly graph. The monthly graph. How can you enter on lower trend? Shooks, you want to Shooks, you are very smart too. How can you enter on lower time frame? Okay. You want me to give you the whole check. Enter lower time frame. Anyway, this is a bonus ahead of my birthday. My birthday is February 9. Yeah, let me see how many people will be able to give me gifts that day. Yeah, use this information. Use this information to do what? Use this information to prepare your gift. Choose. Don't complain again, though. You ask for it, Abi, no problem. No problem. Yeah. Let's say you come here, right? This is 1 hour, right? This is 1 hour, right? Listen carefully. Listen carefully. Just want to do this because of my, ahead of my birthday, to just give you this gift. VIP guys, please, pardon me. So let me just dash them this thing. So this is small. When this thing is grabbed, right? Is grabbed, and you have another, and the market has never been broken. You put your this thing, put your stuff here. Put your vertical line ahead of the highest this in there. The highest this thing, right? You put your this at the highest this thing, right? Now, what will you do? What do you now do? You switch over to lower time frame. You switch over to lower time frame. Let's go to lower time frame, like 15 minutes. See the 15 minutes, lower time frame. You see 15 minutes? Yeah. In this 15 minutes, sorry, let me go back to 1 hour. You do your refinement. You refine the charts. What I mean by the refinement is that you go to scale down. Now, the highest of this thing is that you have a doji there, right? We have a doji. I want to do this is order block. You see it? Order block. I'm coming. This is the liquidity grab. Yeah. Market took out in this place, it took out this place. You wait. This is 1 hour. I'm going to wait. If I start another one, this is the highest one, the next one, right? The next one. Then I'm going to wait for, so you're going to wait for a break of that structure. Yeah. So now I've got my source there. What I call the source. If you don't know the source, source pattern. I've got my pattern, my first pattern here. The source. This is how to use aggressive trading to get the first entry. The first entry. This 1 hour, right? This is order block in 1 hour. You go to 15 minutes. You see 15 minutes. 15 minutes still give you the same order block. That's alignment. 15 minutes still give you the same order block, right? But market structure has been broken in 15 minutes. But in 1 hour, it's never broken, right? So you can imagine what this thing you are putting here in 15 minutes. In 15 minutes, here will be your take profit will be at the next equal low on higher time frame. The next equal low on higher time frame. You are going to set your sell limit at this place, while your stop loss is above the what? Above the order block. You can see this thing you are using. You are using just 6 pips. 6 pips. You are using 6 pips to get 50 pips. Can you see it? Can you see it? And price come here, return back. Price return here to track it. Fine. You've got a lot of orders there. If you are targeting your this thing, your 1 hour, your 1 hour equal lows, it will be here. It will be here. See the equal low here. You can imagine you are using 6 pips to get almost about 130 pips at equal lows here. You can see it. You can see it, 130 pips or 133 pips. You can see the risk reward ratio here. I can see scale down to 1 minute to get that 6 pips. I can see scale it down to 1 minute to get almost about like one pips. But let's hold on to this thing first. 15 minutes. You see it here. And let's imagine we never get to this. Let's imagine, oh, sorry. Where is it this thing now? Okay, this is it. Okay, let's imagine I want to clear off that this thing so that you can just assume this. I'm just teaching you now how to choose. You are the one that asked me this thing. Yeah, listen carefully, please. I won't repeat this. Let's imagine you never get to this place. This is your, yeah. So this is your this thing, right? Let's imagine this is your, you've got your other blocks, this is this thing here that breaks this thing, right? In 15 minutes. In line with your source, that's your source. Source pattern is the highest candle. The highest candle that take out the liquidity graph, the liquidity zone, right? So imagine you never get to the rest. So this is where you are, right? Now you put it up your sell limit. Your sell limit is here. Can you see it? This is your sell limit. This is your sell limit. That when the market comes down, breaks this place, it move up, then it will set you in for sell. It will set you in for sell. It breaks down. It breaks down. It breaks down. It breaks down. So because you're an aggressive trader here, it has triggered your DC, right? Your DC first is triggered. Your stop loss is intact. It's never hit. And because this gives you another hit, when the high of this place cannot get to the high, this is equal high. See the equal high here. This place does not pull to this place. It's telling you that the volume for buying is dwindling. It's telling you that the market makers are selling, right? They are selling, right? That's what it tells you. It breaks. Can you see it? We have another sell again. That one touches it. Our sell limit is triggered again. It never got to your stop loss. You can see it. See it. It never get to your stop loss. That play continues to hit many times because this is order. It's telling you that a lot of orders they have still been left. The market continues to come back to pick more orders. As they are coming back to pick more orders, you are selling. You can set up different position. 1, 2, 3, 4. You get a point. Your stop loss is still at 6 pips. You can, so if you even have $20 in your account, you can still trade. You grab. You are targeting 133 pips. 133 pips from this trade. Now let's see how it plays out. Let's see how it plays out. Let's see how it plays out. It plays out, plays out. Mind you, your stop loss. You are watching the stop loss. You see it? That is for early aggressive trader. If you want to trade with a confirmation, you don't use this, so please, you wait for in a higher time frame. your this thing must be broken in a higher time frame. But because I have my source pattern in lower time frame already been established, that's why I trade aggressively. Your this thing has been broken here now. So this is when for a confirm for a conservative trader, maybe you are afraid of hey, you don't want to risk you risk you are not a risk appetite trader. So you wait for a break of market structure. And you can imagine this market, see you are targeting this low here. You can imagine how this market will break down. You can imagine. So because here you are coming to take another this thing here. After this thing has formed another block, it formed another block here. Let me shift this. Let me shift this here. Okay. So you can imagine it formed another blocks here. So that means you are going to put your this thing here in 1 hour, 1 hour block, 1 hour block. Sorry. 1 hour block. See it? So you wait for price. After the breakout, it touches it here. See the block? The block was being touched. So you put up for new traders now that just late trader that just came in lately. For late traders, yeah, you see it. So you see maintain six pips, it's 6 pips. So you can imagine it went up to hit your this thing, your this after the pullback. It touched your this thing here. I've shown you the this thing now, right? I've shown you the this thing. You scale, you refine to 15 minutes. You refine it to 15 minutes. When you have your this thing there, your other block in 1 hour, you refine it to 15 minutes to 15 minutes. Yeah. So this is same other block in 15 minutes. This other block in 15 minutes. So you see that there's alignment. So this was the first one, 6 minutes. Before this place, you've taken your before to this place, you've taken it has covered your risk here. From this place to this place, it's enough pips that has covered your 6 pips risk. You understand? So you can scale out in one position. You take out one position, then you leave the rest to be running. Yeah, that is the system. You leave the rest to be running. So let's see if our destiny will be met. Can you imagine? So you see that it will, let's see if it will hit the 133 take profit. 133 take profit. So you can scale out some position once you meet your first take profit at maybe I put out at a risk reward ratio 10 out. So your listing is being met, it's going to be hit. I'm very sure. Our target, wow, it's hit. It's hit because we target the equal lows in higher time frame. It's hit beyond. It's hit beyond because there are a lot of because we are still selling. Why this thing continue to, I will give you the clue, another clues. Why you have confidence to see the selling down when you have this new this thing, new block orders, you continue to sell down. You continue to sell down because of what? Because in daily time frame, you can go to daily time frame to check the this thing very well. You see, daily time frame. In daily time frame, my this has just been, can you see it? In daily time frame, the order, this place was broken. And this is a pullback to it. You understand? Sorry, this is daily time frame, right? The higher time frame is showing that the market is in a short while. That is bearish market. It's a fresh bearish market, right? Yeah, it's a fresh bearish market. Now let's go to weekly. Check 1 week. You still see this engulfing pattern that breaks the market structure here. So I'm still having, you see a sell, this is, you see fresh sell. So that means Euro USD, you see fresh under that week. But the longer time frame, time frame is buy. Please take note, is buy. All these are just a pullback, a pullback. But because we are smarter enough, we saw this higher low, equal highs in weekly this thing, and then you see we grab, it comes down. Yeah, you can trace smartly. But the this thing is still very, very much buy. So Euro JPY next week is still going to be buying. It has no wonder it has been going up now. Yeah, it has returned upward now. Yeah, because of what? Because the this thing has been resumed back after this pullback. This candlestick is what gives us that pullback, because at the break of this equal high, it pulls back, then it will continue. If you get another equal high to break, it pull back like this place. You see it comes down. Equal highs. You see equal lows, market to come to touch it, equal lows, pull back, market moves up. Can you see it? Equal lows, it moves up. Equal highs, see it? Equal high here, equal high. This equal high, market comes down. Weekly, I'm telling you weekly. That's this weekly. You can imagine for lower time frame what you will have got when you have this equal high here and you have this a break of market structure here, a pullback. See it? It's massive. It's massive. I will show you. Oh, that was VIP class. I get a new method pattern, another pattern to eat in the market. It's very easy, very simpler than, oh God. I wish everybody would be in the VIP class. I wish everybody would be there, because I may not have the full time it is to discuss in details. So once you just register your VIP, I will just load you the videos. I just loaded the videos and take you special, add you to the VIP group. But I'm having about two pattern now. You understand? About two pattern. When you see this weekly, two patterns that we are going to use right now to meet money in the market. Yeah. Two pattern I'm adding to it to new this now. Simpler, very simpler than this. So that is that for this thing. Yeah. So now, if your market is moving and you miss out at the top of the market, you miss out. What do you use? If you want to come in the middle of a trade like that Euro JPY, what do you use? You must first of all check. You must have checked the higher time frame, weekly and daily, and check the prevailing trend, so that you don't just come in the middle blindly. And I say because the market have been grabbed, so you just call me. No, like this place now, like this place now, eh, like this place now. See this place now. Because that week that break that this thing for equal highs is down. So you still have the confidence of what to see sell down. But when you come in newly, like here, this place, you are going to use what? You are still going to use your BMS. You know the meaning of BMS. If you know the meaning of BMS, break of market structure. See, this place was grabbed. The equal highs here. Sorry, the high of this place, see it, was taken, because a lot of market makers will know that a lot of people will put Let me expand it. Okay, let me do it this way.